down 86% in 2022. Is FuboTV stock a buy for 2023? I'm going to answer that question by the end of the video, so stay tuned. To answer that question, I'm going to look at a few different metrics, so let's get right into it. The first thing I want to show you is FuboTV's quarterly revenue growth and the deceleration in revenue growth over the last several quarters. You see it was growing at over 100% several quarters ago, but that growth rate has steadily fallen down to 43.48% in its most recent quarter. And if I was to argue, I would say this is going to continue to trend downward, but this is actually for a good reason for Fubo TV investors. The company has slowly tried to increase prices and move customers into higher pricing plans, and that will help its profitability, which I think is more important than revenue growth for a company that's in the situation that Fubo TV is in. It's not struggling for growth. As you see, 43% revenue growth is still really, really fast growth for a company, which, it can afford to give up some of that top line growth to do better with profitability. And we're going to see that in one of these next few slides here. And here in this one, it's going to kind of show that that dichotomy between revenue and expenses. I have here in the purple its quarterly revenue, and on top of that line, the orange line, is its total expenses. And this is not what you want to see as an investor or as an owner of a business. You don't want to see your expenses above your revenue. That means you're losing money, right? Your costs are higher than your revenue. That means you're going negative on the bottom line. So that in itself is bad news. But on top of that, as revenue has grown for Fubo TV, the spread between the revenue and costs has also widened. You see here early on, it wasn't that much of a spread between revenue and expenses, but as revenue has expanded, so has the gap between expenses and revenue. Investors, you want to see the opposite of that. You want to see demonstration of economies in scale, where as revenue grows, it breaks the gap, it leverages the expenses, and it starts to become more profitable, or at least starts to reduce the losses. That hasn't been the case for Fubo TV. As revenue has expanded, its operating losses have expanded. That's bad news for Fubo TV investors, and that's why I said it might be better for investors if Fubo TV was to increase prices on its plans, on its streaming content plans, and in that way, it might slow down growth. Of course, if as a customer, if you see higher prices, you're not going to buy as much, but at the same time, it'll at least help with this difference between revenue and expenses that is so troubling for Fubo TV. And so the next thing I'll show you is Fubo TV's cash flow from operations, and then how much cash it has on hand. So cash flow from operations is what you see on the top, and you could see a steadily increasing loss, right? So as this is going downward, that means the cash flow losses are increasing, right? So more losses on cash flow from operations. It turned around a little bit most recently, but still lost 76 million in its most recent quarter. And then, okay, keep that number in mind there, the 76 million, and then look at how much cash it has on hand. Just 201 million. So I know many of my viewers, many of you are smart, and you can do this math here. 76 million per quarter in cash outflow in operations, and only 200 million in cash on hand. That's less than 3/4 of cash on hand if it continues at this pace of losses. So something has to give here. It either needs to decrease the pace of losses in terms of cash flow, or it needs to raise more capital. And this is not a good time to be raising capital when its stock price is down so much and when interest costs are elevated. It's not a good time to be looking for raising new capital. And in that regard, if you're a lender, you're going to ask for a pretty high interest rate if you're lending to a company that's losing money on the bottom line as revenue is increasing. For one, for two, is losing is going through a lot of cash flow from operations on the negative side. So if you're going to be lending into this company knowing that it's losing money, you're going to want a really high interest rate. So it's not going to be easy or inexpensive for Fubo TV to raise capital. I think what would be better is to increase prices on its streaming subscriptions, and that way each new subscriber is not causing so much loss for the company. That way the business is on more sustainable footing. All right, the last thing I'm going to look at is valuation. And since the company's not profitable on the bottom line, since it's losing cash, I chose to use the price to sales ratio, and it most recently it was 0.383. At a time it was trading near a price to sales ratio near 20. So it's way below that at 0.383. It's the cheapest that it's ever been, arguably, but I still don't feel like the stock is a good value, even though it's really cheap, because I don't know what the sales are going to be like if the company raises subscription prices to a point that put the business on a sustainable footing. Once that happens, and then I see how many subscribers stay on, or how many subscribers are added, or how many subscribers leave, then I can determine if the stock is inexpensive or not. As it is, I don't know if this is a good value or a too expensive value. I don't, I'm skeptical of these sales when you're making sales that are not enough to cover your costs. I'm always skeptical of those kinds of sales. It's easy to make sales below what it costs you, right? So I remain skeptical of this company. And so, to answer the question, is Fubo TV stock a buy for 2023? I would say no. The stock is not a buy for 2023. It needs to show me that it can operate sustainably and stop all the losses on the bottom line and stop the bleeding in terms of cash flow from operations. And then we can take a second look at the company once it puts itself on sustainable footing. All right, so that's all I've got. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.